Hey folks, David Frost, mystrategicforecast.com, and in this video, what you're looking at is Diamondback Energy, symbol FANG, F-A-N-G. And what I've got here is a daily chart. And what I'm going to do is I'm going to teach you how to take a trade, whether it's on a daily chart or an intraday chart, and I'm going to show you how to identify levels in order to limit your risk and give yourself the highest probability of reward for a short-term trade for a quick gainer. So here's what we've got. So what I did was I took the most recent pivot low to the most recent pivot high, and I drew a Fibonacci retracement. And you'll see that off of the pivot high, which was about, let's see, 85, 82, okay, we came down and made a perfect 618 retracement, okay, 74.51. See this low here? 74.25. This low was 74.37. That's pretty spot on. You always give yourself, 25, 50 cent wiggle room when the market's certainly moving down like this on volume, right? Big red candle on volume. So anyway, the point is that if you're a buy or a FANG, right, this is your level right here because you know where you're wrong, okay? First of all, you had a prior breakout here, and it looks like a little bit of a gap, but maybe it wasn't. It just looks from the eyeball, it looks like a gap, and I don't think it was. So anyway, you had the 618 retracement, which is usually good for support. Now, if the market continued down, you would have had more support down here at the 72 level, but this was good enough because you really, the market paused, or it didn't pause. It paused at the 382, did not pause at the 50% retracement, which told me that the probabilities were increasing. It was going to pause at the 618. But let's just take this away for a second, and let's go to a different chart, okay? Now let's go to a 60-minute chart. And let me show you what happened. This is a week's worth of trading from this point, from this low. This was last Friday, the 8th, I believe. Okay. Yeah, that was May 8th. And this is down to the 15th, which is obviously today. Okay. So what we have here is let's draw another Fibonacci retracement in. And as you can see, I'm watching this chart not only on a daily basis, but on a 60-minute basis, on a weekly basis, on a 10-minute basis, okay? Here's a 10-minute chart of FANG, which looks totally different, right? But let's show you what happened. Let me show you how I began to identify a intraday trade, okay? So here's what we have. So I'm going to draw another Fibonacci retracement from this low here, okay? And I'm going to draw it to this high here, okay? And you'll see that here's your 618. And the reason I keep bringing up a 618 because that's, to me, in my experience, your highest probability level for a bounce, okay, if you haven't had a substantial bounce before that level, okay, more than a day or two, okay? In this case, you didn't, right? So coming off of a top. So what I'm looking at is I've got these lines drawn in, and I'm watching this market come down, and I'm watching it pierce through the 618, okay? Now, here's where you step up and take a trade, and, depending on your level of risk, okay, I would probably give this, unless it flushed all the way through in one shot in one day and closed below this low here, then I would definitely stop out. But I would give it a little bit of wiggle room, figuring that we're going to find some support at the 618 and get a multi-day bounce off of that after this kind of move down. Okay, so what I'm looking at is intraday now. Okay, let me show you what we're looking at. So you have the line drawn in, and you pierce through the 618. Now I'm in the trade. Okay, I'm in the trade from 76.50. Okay, that was my buy level. 76.50 continues down, and that's okay. Okay, then we begin to bounce, and we come down and we retest where we took from this low to the high we just made. This is about a 50% retrace. Let's check it out. Okay. All right. 50% retrace. Now, the reason I drew that in is because when you see those kind of numbers start to develop, you know you're right and the market is actually reacting to the Fibonacci levels very, very well. Okay, so I'm confident that we're going to bounce off that 618 and we're going to have, in my mind, a multi-day bounce off this pivot low that we just made, at least a day or so. Okay. And this is just one way to read the charts. And the reason I wanted to put this video together is I just wanted to show you, using Fibonacci retracements, is that the same thing applies whether it's on an intraday basis, a 10-minute chart, a 60-minute chart, a hourly chart, which is the 60-minute, a daily chart, a weekly. It doesn't matter. The point is that we look for the levels, and then we look for signals. We look for other support levels. We look for other signals that the market is reacting to the Fibonacci retracements, like this retrace here, which was a 50% retrace from this move to this move. Okay, and then, we figuring that we're going to have one of those A, B, C corrections, and exactly what we've got. So this turns out to be a nice trade. You ride it up for the day. You either leave it on into tomorrow or you take it off. That's up to you. You have a trailing stop, whatever you like to do. So hopefully that's helpful. Just wanted to show you an instance on an intraday trade on Diamondback Energy where Fibonacci retracement worked out in our favor. This is David Frost, mystrategicforecast.com. Thanks for tuning in, folks.